Hey guys, it's your favorite agent out here in Nashville. Nashville's Nick, and I have a young woman that I call my right arm.
I like young. Young is good.
This is Miss Jamie Abbott with Prosperity Mortgage, and we thought this was a prime time to do this video. Don't you think? With all of the crazy.
Absolutely. There is such good information to be heard that is not getting out to people as they consider buying or selling, and I'm really excited to share it with you.
Yeah, for sure. Something that kind of spurred this was, we've been just sort of going back and forth with the creative ways that buyers can take advantage of things that are in the market right now that they couldn't just a year ago. And with all of the misinformation, I call them scare tactics, lots of people grumbling about, well, the market's going to crash, and so we're going to wait, and we're just waiting for all of the price reductions and foreclosures. I thought, I can't make people do something, but I know that regret is a powerful emotion. And before a lot of my buyers have regret, I want them to have real information that they can use instead of what we're seeing in the media. So we're sitting down with my right arm, Miss Jamie, because without a person who hands you the money, you can't close on a house.
Well, I love the team.
Yes.
We're all about the team.
That's
and it
right.
certainly takes a team of advocates as you go through the emotional journey of buying or selling your house. Mm-hmm. But Nick is absolutely right. Excuse me, my chair's squeaking. Absolutely right. And there's a lot of misinformation out right now. And most of it is based on fear. And I could talk for hours, which Nick has said I'm very limited to short answers, about what we see in the media and what is actually accurate. The conversation really came up when we were talking about somebody that we genuinely felt like they were going to regret waiting on the purchase of a house. Yeah. I then started to spiral down on the cost of waiting. I understand that there are scary things right now, especially when the media hones in on only interest rate, but what we are really, really missing is the fact that there is so much appreciation to be gained here locally in our Nashville and surrounding counties. Yeah. And we're missing that because we're only thinking on the terms of one level. There's a real cost of waiting to buy, and it includes several things. Not only the amortization and the appreciation, but the reality is rent is going to continue to increase. Mortgages do not. Sales prices are not anticipated to go down, and even though there's several talks of recessions, if you look historically, sales prices never go down.
Well, economic crisis doesn't mean a housing crisis, and I think that that's where people kind of miss that too. Yeah. Immediately they think, well, the market's going to crash. Well, what is telling you that our market is going to crash?
I would say that we definitely have an unhealthy economy. Mm-hmm. I mean, we cannot negate that. And if you want me to get into PCE numbers and CPI numbers and the economics behind all of it, believe me, I would love to.
Yeah. And one day we will do that, by the way. One day we will do that.
But the reality is, and we're seeing this when the Federal Reserve breaks. Let's hit on that. Mm-hmm. The Federal Reserve and the Federal Reserve.
What is causing the interest rates to go up currently? What is happening behind that so people understand that?
The simplest correlation that I can give you is mortgage rates are going to follow inflation. So if we see inflation continue to rise, you will see mortgage rates continue to rise. When we see inflation come down, you will see mortgage rates come down.
Now, and why is that?
It has to do with the perch of where you're sitting and the return on the investment that you're making. So mortgage rates are a long-term investment. If I buy something from you today for $1, it's not going to be worth $1 now in 2 months because it's losing value. Well, when you look at a long-term investment, and even though people typically don't keep mortgages for 30 years, you keep them from anywhere, I think the average is between 7 and 9 is what I was going to say. It's still a money-making business. So if the dollar is not worth more, then the mortgage and the banking and the lending institutions they're gonna set at a higher perch because the dollar's not gonna be worth more as we continue to move. I mean, inflation is basically a thief. It's a thief of your money. Yeah. And so when you look at long-term investments like that, you'll notice, and the correlation is there and has been there for decades. Inflation goes up, rates go up.
Mhm.
But what we're having happen is appreciation is going up. Now, I'm going to ask you a question because I think this is what I am hearing by the water coolers. Oh, the prices of homes are going to go down. Can I please ask you, is the prices of homes really going down, or are they being at the price point they should have been to start?
There's a difference between devaluation and depreciation, and that's where people don't get it. So in our markets, of course, in 2020 through the beginning of this year, we just saw a skyrocket of appreciation, some in the double digits, and it was really fast, really crazy, and a lot of that was demand driven and continues to be demand driven also in Nashville. But what I always try to sort of tell people nowadays is the sellers that came on the market in March versus sellers coming in onto the market now, the education piece was a little different, and also the market was a little bit different. So they were coming in, maybe 10 to 15% above what the market actually said their home was worth, and they were getting it in the spring. And now they have to get a little bit more realistic and come on the market at actual market value. But some of the sellers, they're still living in the March mindset or even the summer of last year's mindset, and they're coming in a little too aggressive and they're overpriced. And so those people are the ones taking the reductions. If you come in and you're actually valued correctly and you've got an agent that's giving you real information, you're not having to take those price reductions. And so there is a difference between depreciation and devaluation. And we're seeing a normalization in Nashville that needed to happen. We don't need to see 30% increases, in 6 months. That's just not feasible, and you can't keep up with that. So a healthy 6 to 9% increase in value is a lot more retainable and sustainable too.
Yes.
Yeah.
And I would say, even as I use numbers and I go around and speak to different groups of people, I don't use the 18% appreciation that we saw in 2021.
Yeah.
But even if you use 4.1 appreciation on a house
Still
that you're
appreciation.
buying now at the prices available now versus the prices available in 6 months and 12 months. What I'm hearing a lot as a lender, and it pains me a little bit, is, I'm just going to sit tight and I'm going to hold. I'm going to wait a while because rates are going to come down. Okay, rates will probably likely come down because they're cyclical and we see them go up and we see them come down. But what we don't typically see is the prices of houses going down. And you have to be aware that there is a housing shortage. And this is just the opinion of Jamie Abbott, so take it or leave it. But we're looking at a time period where people have gotten afraid very quickly because of mortgage interest rates. The reality is that we took on 416 basis points in September alone. There was a big swing on mortgage rates. That's real. I'm not arguing that at all. Does it impact what your mortgage will be? Absolutely, yes. Do we think they're going to stay that way forever? No. But what we do know is houses are still going to continue to appreciate. So if you're looking at a house that you're buying right now, the average median purchase price $445, $445 in 6 months is going to be $467. And even now at the second quarter of next year, we might see mortgage rates fall down a little bit. That's when you come in and you refinance knowing that the return on investment is there. So now you've gained the appreciation, you've taken advantage of the amortization you've already paid. You have not liquidated what you would pay in rents, which, by the way, are going to go up 8% every year after your first year is the average nationally. And now you have started to create your wealth. That was a lot, wasn't it?
Nope, that's awesome. And that's what they need to understand. To me, it makes no sense to continue on the process of waiting when it's going to happen anyway, and you're going to pay more waiting.
One of the favorite things that I am seeing right now is days on market went from 24 hours to 7 days. I think Nashville right now, days on market, is it 33 days?
Depends on the price point, but yes.
But we'll say 33 days. Well, what I'm seeing, and again, I'm a lender, I'm not a real estate agent, so I'll be very careful about staying in my lane, is there's more opportunity maybe in negotiation in
100%.
closing costs.
Yes.
And why this is so
Or reductions.
helpful. Or yes.
Yep.
And why this is so helpful when I'm looking at things is a lot of people want to keep as much cash on hand as they can. So the down payment, you're going to have the down payment no matter what. But if you can get your closing costs supplemented and not have that expenditure as well, this is the first time I'm seeing that in probably a year and a half, where there is a little more give and take. I will be honest, I don't think it will stay like this forever.
Nope.
I think we will be back into the market we were in 4 months ago once we see inflationary numbers come down, because the reality is there is a housing shortage.
Yep. And the demand is here. And that's what I've also, tried to keep, my buyers' eyes open to, that right now in this little bit of a lull, they're getting price reductions that we've not seen in a year. They're getting closing costs paid. They're being able to have all the normal inspections, appraisal. It feels like a more normal market, and sellers are giving more, where just 6 months ago, you couldn't even ask for an inspection or an appraisal. You definitely weren't getting a price reduction. In fact, you were on average going in 10 to 15% over ask, no matter what appraisal said, and you were coming out of pocket much, much, much more money.
Yes.
And so this is the best time for a buyer that couldn't buy a year ago, especially our local buyers.
Yes.
That couldn't compete in this market. They actually have opportunity, and you can always, like you said, refinance.
You can always refinance. And I had this conversation with some peers the other day. One of two things is going to happen, because the reality is we're going to continue to see rates go up, because we are already anticipating that the Federal Reserve is going to raise rates again in November and likely in December, and maybe at the start of 2023. They're doing that to control inflation. We want to see inflation come under control in the mortgage industry, because we want to see those rates. So what you're looking at is a very short term where you might hold that mortgage, because once we see the rates come back down, you're probably going to look at and revisit refinancing, and you will either want to take advantage of the equity you've gained, or you just want your payment to become lower. But what you will have done is bought that house at the lower sales price and come out of pocket much less.
So I'm hearing buy your rate down, have the seller buy your rate down. What does that mean? And what does that entail? And who does this fit?
So there's a couple, I don't always recommend buying rate down. And I'm really not in a position right now where I'm always recommending it, because I do believe that probably by the second quarter of next year that we're going to see those inflationary numbers come under control and rates come down. So I really do not want people to come out of pocket a lot of money.
What does that normally entail?
So tell me, like, I don't understand the question.
So in other words, if let's say the house is $350,000, this buyer wants to come in and have the seller to buy their rate down, what does that entail the seller to do, and how much does that normally cost?
Okay, that's a more complicated question, but a great one. So, first of all, your rate is going to be based on a couple of things. Mostly your credit score and mostly your down payment. Those are the two big indicators. So, rates are going to fluctuate with that. Rates are put out on a daily basis, and they have margins each day. They are not, sometimes the mistake is, well, if I pay for a point in rate, a reduction, I'm going to get my interest rate reduced by a point. And the reality is that's not true. Interest rates move by an eighth increments, and within those increments are margins of how much it costs to get from, say, 7 1/8 to 6 5/8. On one day, it could cost a point, which would be 1% of your loan amount. And on other days, it might cost 2 points. So you really need to dive into the monthly savings that you're getting for the out-of-pocket expenditures. Now, I would say I'm seeing where builders are looking at those options of buying down points for their clients moving forward. But again, this is new, because builders are also aware that we are still in a housing shortage. And even though we have houses that are being sold right now, a lot of them are not completed and ready to be moved into.
Well, and that's why I asked you that, because I'm seeing on the MLS, like there's a lot of sellers that are saying, or the agents, writing in special remarks, what have you, that sellers are willing to buy down points or pay closing costs or a combination of both. And I find that to be a little misleading. Like, well, how do you even know what that means? And how does that make sense for every single buyer? And what does that mean for the buyer?
Well, and it can mean a couple of things. So last week, actually, we lost 115 basis points in a day. I know that I'm speaking mortgage, but basically what that means is there was a lot of movement in the market that day to the negative. And so for a minute, it was hard to even get an interest rate at what is called par, where you're not paying any discount, everybody's happy, everybody wins. So for a minute, even somebody with a 740 credit score and putting money down on their home, they were still having to pay some discount. This goes back to the conversation I had about the lenders do not want to let rates get so high that people are going to have another refinance boom, because lenders are in business to make money too.
Right.
And there was a lot of money lost after the CARE Act was announced and everybody refinanced their houses before they could have a return on the investment that they made. So it is a little bit trickier. Now we're seeing that loosen up. We're seeing, you may hear if you watch any of the economic channels, the coupons are opening up, which means on the secondary market, investors are now willing to look at a higher interest rate to buy and purchase that you would find in your portfolios at one point. So today I saw we had interest rates available a little bit higher, so that out-of-pocket expense of paying a discount has been alleviated. I don't want to say that it's
trying to make it a little easier.
And I would say this: if you are looking at a rate that's high today and you're spending, say you're buying that $400,000 house and you're spending another $4,000 in closing to get a half a point of interest rate, well, I don't know that is always worth it. I do know this though. I still go back to buy now because there's a lot of buying power. In addition to the fact that there is a lot of buying power, one of two things is going to happen. If the interest rates continue to climb like they did in the late 70s, early 80s, and they get into that double digit, you're going to be really happy you bought now. And if interest rates happen to fall and go back into their typical cycle of 5s and 4s and 6s, you're going to refinance anyway. So I think that conversation is being lost because banks and lenders have done such a great job only focusing on interest rate for the last 2 years. And we have lost sight of the much bigger picture that involves growing your own wealth and really at the end of the day saving money today from waiting till tomorrow.
So you, as a lender that has worked in this market many years, you see this as a fantastic time for buyers to buy, and don't wait.
I was like, my daughter's 22, now she lives in North Carolina, but my mom is 72, and I always say, if I am not giving advice the way I would give it to them, I am doing it wrong. And I am telling you, the out-of-pocket expenses now, going back to that closing cost, potential discount points paid by your seller, is saving you more money than anything we've seen for the last 18 months.
I agree.
And when that rate does come back down, guess everybody's going to come out of the woodwork again, and we're going to go into multiple offers again, and then we're going to go to
competition.
So
30 offers for one house. Oh man.
I think there is a real window of opportunity here. And if you can overlook that interest rate and back up and say, so if I pay a high interest rate for 2 years, still my seller giving me $10,000 in closing, you're still in the black.
And that is where I want to kind of just put out there to my people, stop listening to your granddad and your friend down the road that said the market's going to crash and, there's going to be foreclosures all over the place. It's not going to happen, guys. And though we don't have a crystal ball, I can tell you that we watch numbers, and we're watching this daily now. We're used to, we would pull things 2 and 3 weeks, pull comps once a month. We're looking at comps every week. We're looking at what the market is doing every single week to the day. I know you're looking at
I'm
rates
looking at every hour.
And so what I can tell you is it is less stressful for buyers right now because they are able to go and look at a house and not have to make a decision in the driveway as they're getting in their car. They can go home and have dinner and discuss it with their spouse. They can, take their time. They can have inspections. They can ask for a price reduction. They can ask for closing cost. And they have such a better transaction. I just feel like the experience is so much better, so much less stress. If you wait, you are going to find yourself in a position that we just came out of this past spring and summer, where you're competing, paying more out of pocket, waiving contingencies, and paying a lot more for homes that it's just unnecessary.
Yes. And if we ever want to do another video, we should do it on, which I would love, why we're not in a housing bubble.
Yeah.
And why we're not expecting a housing crash.
Yeah, that would be great. Yes.
If you want more information, just call.
Yes. Jamie, how do clients get in touch with you?
Well, you can just call. Our office number is 615-425-3775. I have a couple of girls that I am fortunate to have on our team. So, we really are here to be a part of it. And it's a very special, emotional, exciting event. And at the end of the day, we're really working for the excitement of it.
Yes.
Which again is why we wanted to talk about this video, because we're both so worried that people will regret waiting more than we want them to.
And I say regret is a powerful emotion, and if I don't ever like to talk my clients into anything ever. Sometimes though, like times like right now, I just want to reiterate how amazing this time is for buyers, because we have not seen a time like this in 2.5 years.
Well, and I think you're hitting the word educate. And really just call, because we are in it. We understand that not everybody does this every day, but we also understand, I study the last 60 years constantly, so I can see what is coming. So we know what is happening, and we're going to anticipate the movements as they come, and we want to share that information. Really, that's it. We just want to share that information, more so than, I always say, quit talking to people at the water cooler.
Yes, please. I had somebody say that to me the other day, like, Nick, what are you doing? Are you waiting for the crash? And I'm, crash? What do you? It's amazing to me. But again, it's a time where there's so much bad information, and some of it is really innocent. People don't know what they don't know. So it's always good to dig in and get in front of a professional that actually knows what's going on, especially in a market. Every market's localized. You can't compare our market to New York or Los Angeles or any Chicago. Every area is going to have their challenges, and of course, we're all kind of dealing with the same mess and gunk in the news media. So it's always good to get with your local professionals and find out what's going on. So contact Jamie, contact me, and we'll be happy to answer your questions and help any way that we can.
Yes, absolutely. Even just answering questions and having the conversation.
Yep. What's your email address, Jamie?
Jamie, Jamie, @Prosperity Lens. PROSPERITYLENDS is in Sam.com.
And she's a local, and she services all of Nashville and surroundings, so she can answer any questions that you might have about this very market. So we love you guys, and we will talk to you again soon. Bye.